Hi, everybody. Good morning, good afternoon. This is Trendy John from Simpler Trading. We are going to start this week's broad market analysis. We'll be covering today, which is the 14th of July up into the 19th. A few big things. Tomorrow is my official anniversary with Ashley. We just got back from our vacation. I'm pumped to be here. I can't wait to trade with you. But in saying that, I'm going to spend 3 hours tomorrow with you guys. And then I'm taking off, and her and I have reservations and things that we want to do here in the local area. And then also on a personal note, we are taking off on the afternoon of the 18th and headed to Nashville. So if anybody lives in the Nashville area, please hit me up. I am going to see a couple members there when I'm there. I can't wait. I'm pumped. So again, there's a lot going on out there. Okay, I'm just gonna say that we had an attempted assassination on our former president. I don't know how that's going to impact the market. If I were to guess, I would say the market's going to gap up just because I'm looking at X and it seems like people are just really pumped. It's either that or we're going to get some volatility. No matter what happens, though, you guys know I'm here for price action. I'm here to show you and talk to you about supply and demand. That is my focus. Okay. So let's go ahead and get started with this week's broad market analysis. And let's start here with the major economic reports and Fed speakers that are coming up this week. So, tomorrow already, Fed Chairman Powell, he speaks at 12 p.m. This is Eastern time, so 11 o'clock here for me. This is about the time I'll be taking off, so this should be perfect. I'll most likely set up a set and forget type of 0 DTE SPX trade around our futures blueprint. So again, we'll be covering that first thing in the morning. Also, we have Empire State Manufacturing Survey just before that at 8:30, and then on Tuesday the 16th we have U.S. retail sales, import price index, business inventories. Fed Governor Adriana Kugler speaks. And then down here on Wednesday, housing starts, Fed beige book. Thursday, July 18th, initial jobless claims. And then Friday, New York President Williams speaks, and Atlanta Fed President Raphael Bostic speaks. Again, all of these are just news catalysts that push price into supply and demand. All right. And that's how we trade. We just need to be aware of these. We don't trade based off of them. What do I mean when I say that? Like, I'm not looking for numbers. I'm not the news. I'm not here to dissect stuff and talk to you about it and say, hey, initial jobless claims came in at blah, blah, blah. Let's go long or short. That's a bunch of BS. I use that information. I allow it to push price into supply and demand, and then I trade it. That's what we do. That's how we educate ourselves. We find these levels where the bigger turns in the market are going to happen. And you'll see that these catalysts, all they do is turn that dial up, if you will. If you imagine 0 to 100 miles an hour, they turn it up. Typically we're cruising at like 30 to 50 miles an hour. But when these catalysts come out, they turn it up. Then we're cruising at somewhere between 70 and 100 miles an hour. You just have to be faster. You have to understand where these levels are. Okay. So again, just catalysts that we want to be aware of. Moving on down here, this is earning whispers. I use them out there on X, and I have used them ever since I started trading. What I do with this information is I look at names that are going to report. Why is this important? Well, one, maybe I want to trade it into earnings. If you know anything about me, our charts speak for themselves. It doesn't matter what catalyst is coming up. I don't care if Jerome's speaking. I don't care if they're about to have earnings. Um, it just doesn't matter. Supply and demand has been here since the inception of the market. That's where price action happens. So if I'm interested, for example, what I'll do is say, okay, Goldman Sachs, right? I love this name. I look for supply and demand. I understand where price is going to push. I'm going to buy around those levels. Or I simply wait until they report. I wait for price to push into those levels, and then we trade them. Okay. These names are names that are interesting to me. You may have a couple out here that you find more interesting, but again, I've underlined what I am interested in for this week. Goldman Sachs, boom, love it. BAC, back that truck up. I love this name. I do well when I trade it. I'm definitely interested in it. And you know what? XLF looks amazing going into the end of 2024. So, yes, I think banks are going to do good. Yes, I think if they pull back, it's a buying opportunity. This is my opinion, But again, these are names that I'm interested in. United Health Group, UNH. Moving on over here, Schwab. Why did I underline Schwab? I'm not really interested in it, but I am interested to see how they've been doing ever since the Thinkorswim merger. It's it's less than desirable. I'm just kind of curious. I'm sure they're still doing well, but I'm just curious. And over here, ASML, J&J, United Airlines, Alcoa, definitely bullish on this long term, have been this year. So again, interested over there. And then on Friday, not much going on. Sorry, and I forgot my one favorite name, Netflix here in ISRG. So Netflix, definitely interested in. I'll be most likely looking for a debit spread into their earnings, meaning I will hold it even during their earnings. And I can't wait to review that with you guys. Because it's Thursday afternoon, I will most likely have the plan for Thursday morning. Before I catch my plane, we'll go over that and then we'll trade that. Okay. So that's something to look forward going into this week. SPY and QQQ neutral strategy. What I'm going to do now is move this up. All right, and we're going to get into trading view. What you're looking at here is the SPY. All right, I am using a quarterly chart, so 3M, and every candle that's on here represents a quarter. Now, we've been all over this year, and again, everything looks great. Trading, I feel like, has been, I wouldn't say the easiest, because it's probably easy for people to think, every single week, every single month, hey, we're probably going to get a big pullback, but then we don't get it. It's been a great opportunity to buy lower time frame demand zones and just kind of stick with the trend. Why do I like the quarterly? I'm going to be very upfront with you, because most of my money that I have made this year has come from a higher time frame. It's been all about the process, the plan, meaning when I talk to you about this, I'm sticking to a higher time frame plan, and then being patient. That is huge. When you're talking about higher time frames, you have to be patient. And honestly, the majority of traders just aren't patient anymore. And that's not necessarily your fault. I blame it on a lot of different things, like services and different traders out there saying, "Hey, you have to get into intraday trading." When honestly, intraday trading's been great since I started trading, and so has swing trading. The markets don't change. What's changing is social media and the desire to find ways to teach you all sorts of different things. When for me, we've been using the same indicators, the same levels, the same concept for over a decade. And this is why this is important. We don't change our process. The only thing that changes is, again, in my eyes, is social media. It's really put a lot of attention and focus on a lot of different things, and it's hard for traders to concentrate nowadays. Listen, I love it. If you want to trade on an intraday chart, we got something for you. We have the PMZ. If you want to trade swings, all I'm saying to you is, for me, that's where the bigger money is. But you have to, in order to trade like that, you have to learn to be patient. Everything that we teach you is fractal. That means if I show you on a 10-minute chart, you take that same mind concept and you apply it to a 3-month chart. Just means you have to be willing to allow candles to close, make sure that your EMAs are in check, make sure your demand zone and your supply zones are still there. As long as all that's happening, you just stay the course. And look at this chart. I can't make this up. I was at the Money Show last October in Orlando. Then I went to the Money Show in Las Vegas, and I said the same thing. We're super bullish. Matter of fact, I said back in October 2023 to buy the dip, and ever since then, we have never looked back. Matter of fact, we are working on our fourth quarter, or 1 year, if you will, close to a year, that we've been going straight up from there. Yes, some minor pullbacks, but I've read the market perfectly. And I'm happy that you're here, and I will continue to read this market very, very well. That's what I do, and I'm good at it, and I can't wait to teach you. If you're just listening in, you've never been a part of Simpler Trading, come over to Simpler Trading, check us out, come join the room with Melissa and I, and we'll show you proof of concept. Now, what I like to point out about the quarterly chart is, really, at the end of the day, if you just stay long above the cloud, this is an EMA cloud. And anytime prices move down to the EMA cloud, like in 2022, and right up here, you can see 2022, we had 3 quarters down. just a little bit of patience and a reclaim of this cloud allows you to benefit and potentially profit very, very well on this move to the upside. Now, back here in October of 2023, not only did I get super bullish, but then we got a trendy buy signal. And these are rare. And I talked about them at the beginning of the year. I say rare as on a quarterly chart, but man, when they pop up, you better be looking and willing to buy and hold and have that patience because the after impact of these buy signals has worked out really, really well. And here we are. I mean, you could see prices were at or around $400, and now we're sitting up here towards the 560 level. So, really big deal if you think about it. Now, the next thing that I want to show you on this quarterly chart is this right here. This is an inside and up formation. We teach about it here in the room. You guys know what that is. I'm calling that deep value. Just in case something crazy happens, this is where I want to buy this year. It's an election year. Who knows what the hell is going to happen? I mean, last night there was an attempted assassination on our former president. This is absolutely wild. And I don't know what's going to happen. So, if for some reason there's a lot of volatility, something else happens, prices move down, I want you to remember this area. That's where I personally want to really lay on the gas. So far, this quarter is continuing to show continued strength and higher highs. Therefore, support comes up to 527 by 504. We could just call it 500. Notice over here we have what's called Fibonacci extensions. I teach you that and how to apply those Fibonacci extensions. You guys can see that we've come up. It looks like we've hit T1, T2, and just short of T3. So your next target is 568. Looks like we closed out on Friday at 559. All right. And again, this support down here, this is what I would call like mid support. All right. And again, your deep value or your demand zone is down here at these levels at 482 by 400. Yes, they're very far away, but you never know. All right. What I do know is prices like to come back to these zones. It's just timing is the variable. Let's go ahead and go over to the Qs and take a look there. Now, the chart's going to pretty much look the same, folks. You'll notice here, again, this value area of using the exponential moving averages, specifically these numbers that I like to use with the supply and demand methodology, but also that deep value coming in at or around this inside and up formation there. Take note of it. Why? Because, again, timing is the variable. I don't know what will lead us there, but some sort of event in the future most likely can pull us back into that area. And I want to be ready to again lay on the gas. A strong start to this quarter as well. I wouldn't expect anything different, resulting in higher highs and new support. Your new support is 465 by 441, and your deep value comes in around 410 by 300. Again, I don't want you to think this is easy. If something happens in the market and prices pull all the way back to here, this is where I will tell you, you will be scared. The majority of traders will be scared. But from past historical data looking at these levels, this is where I want to get long. Okay. Now, for the for the time being, lower time frames, we're looking at demand zones. I'll show you that here in a few minutes on our futures charts where I want to be buying if we get minor pullbacks. These are more of a major pullback. We're looking at again the quarterly time frames, and this is for my traders who are basically in the same boat as me. You're making the money over longer period swing type trades. So I'm trading options with anywhere from 6 months to a year. I'm also trading options on a lot shorter time frame, a couple days to a couple weeks, but the majority of my money being made is on these longer dated options this year. I'm also in equity. I trade equity, futures, and options. A lot of people ask me to break it down. Well, how much do you trade? Primarily, I like to keep somewhere between 3 to 5 positions in equity. I build them, I scale into them, I accumulate them, and then as price goes up, I am trimming those out. On options, again, we could trade anywhere from 1 to 3 times a day. Trading options, a lot of that is going to deal with 0 DTE SPX trades. I love trading those, whether it be spreads, butterflies, or just an out of the money type lotto type trade. Again, that's pretty much every other day, sometimes daily. It just kind of depends how the market's looking. All right, and I also sell iron condors when the time is right. all right, on that SPX. And then again on equity, well, futures, we go over that every single morning. ES and NASDAQ, I give you a plan. I tell you where to buy, where the trend targets are, and so forth. And I love trading futures as well. All right, so you kind of get all of that when you come over here to Simpler Trading, and we have a awesome trial. So make sure that you guys come in and check that out. I think it's like $7 for 30 days or something like that if you're interested. Okay. All right, moving on. All right, so we know about the Qs and we talked about the support. We came up and hit my first extension target to the T, 502. Now, why is that important? Well, we hit that level. That's going to be resistance for right now. And up and over that, we could see upwards towards 524 to 537. Again, long term. This is only, we have 2 months and 17 days until this quarterly candle closes. We just basically started this quarter. All right. So again, quarterly candles. All right. Theme remains the same. Let's buy those lower time demand zones until we're wrong. Let's go ahead and move on. The next thing that I want to be showing you is going to be the dollar, or the DXY. All right. Now, why is the DXY important? Again, guys, this is going to be a little bit different. We're going to come over here to a weekly chart. I've been showing you this again since October, and we played it perfect. In October of 23, we were right here. All right. And again, I love to tell this story because it goes to show you that a lot of supply and demand traders were on a whole different level. I'm not saying other traders aren't good. There's amazing traders out there, right? There's a lot, but there's also a ton of traders who do not know how to read the market. And I feel like 9 times out of 10, I can out coach and tell people exactly what to look for when it comes to the analysis of what's going to happen. So listen up. DXY, or the dollar, in October was pushing into supply. Well, the idea is when the dollar is pushing into supply, I expect the dollar to pull back. So identifying these zones in advance can give you an idea what's going to happen next, right? So if the dollar is going to drop here, I can anticipate that in October that the SPY, the NASDAQ, the YM, the RTY, or the IWM, the Dow Jones are looking for buyers. All right. So that's exactly what happens here. We break down. The market then goes bid, meaning when I say the market, I mean like overall the market, not the dollar. The market starts to bid. Buyers come in and things start to look really good. Well, finding the demand zone gives me an idea how long that rally can last. And boy, did it last for a long time. All right. Then as the dollar pushes into demand, I expect a bounce. Well, I found the demand zone far in advance. So we have an idea of how long the rally can last. We stay bullish. And then when we get here, we start to get a little skeptical. You start taking profits, doing your thing. You're looking for the dollar to bounce, and you have to be a little bit more on the cautious side, if you will. Well, it did its thing. It came up here, and guess what? It hit supply again. All right. And we expected the dollar to drop. That's exactly what happened. The market rallies again. And then as we were getting closer to demand, I told you to be careful. That was right, right? We were careful for a little bit. And then as we got closer to supply, boom, the dollar drops again. So, what am I looking at going into this week? Well, this is 2 consecutive weeks. I'm typically looking for 2 to 3 weeks down, okay? 2 to 3 weeks down, and then you're looking for a bounce. Well, in this case, I've already found you a demand zone that is right here. I expect the dollar to hit in this area, and when it does, I expect it to bounce. Now, right when it touches it? No. There are different things that we use when price gets there to determine if we're going to get a higher probability of a bounce in that area. And again, my biggest thing is make sure you set an alert here this week and know where that is. So around 103.7, because there can be a bounce, meaning the market could also start to pull back or we see some volatility in the market. So 103.7 being that level where I would be cautious and just understanding you're looking for signs of the market pulling back. And then if for some reason the dollar comes up and at or around 105.1, that is about the area that I would expect it to reject again. So let me just kind of show you what I mean by that. Um, Again, if we were to take, let's do this arrow. If we were to say it comes into here, all right, and then it could bounce, and then it comes up to that 105.1 level, and then I expect it to do something like that. So you get an idea of what the market can do during this move from the dollar. Okay, but overall, just a little cautious as we get close to demand. The next thing is TNX. All right, 10-year Treasury. What's going on here? Same thing, guys. I told you what was going to happen here in supply. I told you what would happen here in demand. All this nonsense on the news. Uh, Look, I'm not a conspiracy theorist. I am reading price action, but I'm telling you right now, you can predict what's going to happen in the news, if you will. We don't watch news, but I got tired of it. I just totally understand that it's just bogus and it's there to frighten people because they know that the masses watch news. And if you're a day trader like me, news is not doing you any good. All it's going to do is typically create fear. It keeps you from, those opportunities to buy or sell. They create euphoria when you should be looking at trimming and selling, and they create fear when you should be looking at buying. You don't believe me? Go back, look at news, look at supply and demand zones, and see what I'm talking about. Okay. Now, disclaimer, just because there's fear out there does not mean you just go out blindly and buy something. All right. There's technical to this. There's technicals to this, and I teach you how to do that. All right. But anyways, it hit supply, it pulled back. The treasury pulled back. It is in demand. It did make a lower low. As long as the TNX cannot get up over 4.3, I think we continue to pull back, possibly into 4.128 before we bounce again. I do have an alert there. Sorry, at 4.129, and if we break below 4.129, I think we head back to the 4. Okay, and then by 2024, I actually think by the end of the year we probably fall in here somewhere around 3.6 to 4.0 again. All right, so again, that's what I'm looking for, and let my charts speak for themselves. Okay, so again, a little bit of caution, just like the dollar. We're at demand, but we are making a lower low in here. Okay. Next thing I want to talk about is the skew. So what's up with the skew? Skew is very important. I've done a video on this. You can go out onto my YouTube. I've done a lot of videos, almost 500 educational videos. So if you want to go out there and check them out, please do so. But we're at 150.8, pretty extreme. I'm interested to see how the market opens up after yesterday's events because we're at extreme reading. And if we kind of gap up, so from a bullish note, if we gap up, you can see extreme levels. These extreme levels, when you think about the fear and greed, basically pushes us into the greed section. So again, people are just like buying calls hand over fist and just kind of doing their thing. Okay. If for some reason, again, I don't know what's going to happen, but let's say that the market gaps down, it makes sense to me with the dollar and the TNX right there at those crucial levels. And also, you can see the skew came up and hit the trendy edge, it backed off. So, anytime the skew starts doing this, that means more fears coming into the market. All right. Either way, I've talked about this all throughout the year. And it's worked very, very well. Anytime the skew has come into this 133 by 130, somewhere in this area, we're buying 5 to 10 days out for calls. And anytime the area is or the skew is getting up in this extreme level, we're buying 30 to 90 days out with puts. In this market, I'm doing out of the money because it's just been a hedge has just been really a pretty lame excuse to take a trade, to be honest with you. It just doesn't really work that well this year. So I'd rather buy out of the money in the event that we get some kind of crazy catastrophe and the market pull back hard. I'm going to make good money, but if not, then it's really not that much skin off my back. I'm only spending about if you think about my net liquidity and what I have exposed every week, month, and so forth, these positions are probably just less than 1%, okay, for a hedge. So definitely less, actually like a 0.5%. Okay, so very small because I am leaning bullish for this entire year. Okay. All right, moving on. Let's go ahead and go to the fear and greed index. Just simply come over here and you'll notice that the fear and greed index is at greed, which is 56 points. Yes, if we get some sort of big gap up, we have a lot of room to work here. When you're thinking about 0 to 100, there's a lot of room for traders to continue to get extremely greedy. And this one's hard. I hope it's okay that I talk about this a little bit. This is hard because this is an event, and I talked about this on X last night, and I don't care who, this happened to. This was very courageous, in my opinion, and for whether it's the current or the past president or a future president, for someone to get shot at and to stand up and to let Americans know I got your back, it says a lot. Being a veteran, I really highly respect this. And again, I don't care who it is. All right. Lots of respect. That puts a lot of pride in me that I have not felt or seen in a long time. This world, there's been some craziness, and I'm pumped, man. So, you know what? I'm pumped to the fact that if we gap up, we got a long area right here to be pumped. However, this is what I'm getting at. Don't let those feelings get in the way of price action. Okay. So I don't care how pumped you are or how you feel, put that stuff aside, watch price action, know your zones, and trade just like we have for this entire year. All right? That's enough on that. Let's go ahead and move on. Futures, ES futures, let's get to it. I'm going to go to Thinkorswim. This is a weekly chart. All right, guys, so this is the update here. Overall sentiment bullish by the demand zones if given the opportunity. You guys can see them below. If price takes out previous weekly high, we continue up towards 57.33 to 59.44. Notice that I did have a buy signal while I was away. That buy signal did result in several points to the upside. We then passed our extension target. This was my first extension target, but if you read now, that is now support until proven otherwise. So that's our close support, if you will, of 56.43. So let's just say we gap up. Boom, we gap up something like this. Well, guess what? If for some reason it's a fade or something, this is where I'd be looking for price to go bid. Okay, so it's support for right now. If we gap down, that's going to be your resistance for now. Okay. Also, a couple things. The 9 EMA is confluent now with the bottom of this inside and out formation here. All right. Let's go ahead and move on. Our next one is going to be the daily. You guys know these have my triggers on them: trigger long, trigger short, and resistance. We don't just blindly trade this to the upside or downside. There's a few things that we look for at these levels. And again, you can learn all about that here at Simpler Trading in the Trendy Room. Next thing that I want to show you, let's go. And before I do that, can you guys please just like the video? Take a few seconds to like the video. I appreciate that. And again, we will be bringing back the SPY and QQQ neutral strategy. I'm going to be doing that with you guys on either Saturday or Sunday, not this coming week. That's right. We have to wait a little bit because I'm headed to Nashville. But right here, so I'll be gone from here. I get back on Sunday. So I'm either going to do this on Sunday, okay, at night with you guys, or I'm going to start it the next Sunday, which would be the 28th. I'm not positively sure. Let's see how I feel when I get back from Nashville. But what we're going to start doing is I'll send out this BMA, and this is kind of a longer one. I missed you guys. I wanted to talk a little bit, but I'll do a short BMA, and then later on in the day after I go out on the water or whatever, we'll come in, you know, grab some water or whatever, grab a drink, and jump on YouTube or something like that, and we could stream, and then we can go over the broad market or sorry, the neutral strategy, and then I'll teach you how I came up with the levels every weekend. Now, as long as people are loving it and liking it and retweeting it on X and all that kind of stuff, I'll continue to do it because that shows me there's value in doing that. Okay. So, again, 21st or 28th. So, I look forward to it. More details to come. Let's go ahead and move on. Now we go into the 4 hour. The 4 hour looks like this. It worked really, really well before I went on vacation to buy the zone. You guys can see the results there. Now going into tonight, this chart, this is a 4 hour zone. This is resistance up here. You can also call this supply. The only reason I didn't make this red and call it a supply zone is because of right now it just there's not enough down pressure for me to necessarily call it supply, so I made it gray just so that you can understand its resistance. Extension targets to the upside. Again, this is from a 4 hour perspective. These are the areas where we look to buy. Okay. Now, the intraday. I went ahead and updated your future charts over there under ES, NASDAQ, YM, RTY, and futures. What I'm talking about is if I come right here, if you guys come into your node section, just click here so you can see tonight's charts. Okay. All right. So the next thing, let's go ahead and take a look at the NAS, and then we'll get to Bitcoin right after that. Okay. All right, so on the Nasdaq, same thing. Overall sentiment by the dip at lower time frame demand zones that I've already plotted out for you. You guys can see we hit the first extension target. We backed off from that. That's pretty normal. Far as tonight goes, I'd be looking for 2041, or sorry, 20,417 to hold, 20,858 to be resistance until proven otherwise. Once we get over that, I think we head up towards 21,374 by 2200. And if for some reason I'm wrong and we gap down, look to buy at the 9 EMA, and that's roughly right now around 19,645. Overall, I am bullish. Moving on, these are our new levels for the triggers. You guys can see those. You can pause this right here and put these on your chart, and let's move on. On the 4 hour, this is looking good. Now, this is a little bit bigger of a sell off on the NASDAQ, so I deemed it supply. It's a red box. I would expect resistance in this area again. I don't know what the hell is going to happen tonight. I don't know if we just gap up into supply and then we break down from there, or this, it's super bullish and we just break through there and make new highs again. I guess we'll find out soon. But what I do know is if we break down and we're still in this zone, I'd be looking to buy the dip in this green zone down here below. Okay. Next thing that I want to show you is Bitcoin. Why? Because I was all over this. I was right. I am, again, take it as you want. This is not an ego thing. I've been doing this for a long time, but I'm right a lot, especially when it comes to the charts. Before price even got here, I told you to look for the breakdown. That's exactly what happened. It came into demand. This is where you should be looking at buying. It's pushed up there. Technically speaking, again, I don't know what will happen tonight, with what's happened over the weekend. But regardless, what you need is you need bulls to get up and over the cloud first on the daily. That would be your first step, and that needs to get over 63,200. Technically speaking, if it can't, this is just resistance in here, and I would expect resistance around 62,105 by 63,977. If for some reason we get up and over that, that's very bullish, and then we're targeting towards 67,000 again. So about 10,000 points to the upside. Okay. So that's what I had there on Bitcoin. That is the broad market analysis. I made it very quick. We talked about it. Don't forget to go through all the notes. All right. Please do that and take note of all the different charts that I gave you for our watches tonight. I'll be adding more to that. And in the off topic section, if you have a chart that you're interested in this week, let me know. All right. And then I can work up and do the blueprint for you so you understand where I would buy or sell so you could use that to your convenience. I really appreciate you guys. I'm happy to be back. Don't forget Melissa's on vacation. So let's give her that time off that she deserves. And I can't wait to trade with you this week. Have an amazing day.